Happy to have you here. Let me talk about why we have created about this the key findings of this report today. If you everything that you've read there is real, it's data backed about the lack of capital that's being deployed towards female founders, despite the great work they're building in their business, their state, their growth, they're impacting communities, they're impacting the continent. We looked at data over the past 7 years, where this is why we did it. And then what we did was we looked data over 7 years. We looked at total capital that had been deployed. It was over 23 billion over that time period into over 4,000 transactions on the continent. Now, these are the key findings we're going to present today. The actual report is going to come out in this month. Beyond the data, we're just showing you the key findings from the data. We've also interviewed female founders, ecosystem enablers, investors, and we'll continue that. And that will bring a lot of richness to the data we provided to help go beyond just the data, provide qualitative, provide depth, provide rationale and understanding. I think that's very important. The work we've done here is complementary to some of the other work that's out there, but no one has really gone deep to say, let's hear, let's understand, let's help shine a bit of light. So we don't know it all, but we just believe that this is our bit to do. And we want to work with all of you here to be able to provide the deep insights that help to shape the ecosystem to make it better. This will be an annual report we do every year going forward. There'll be other insights and data that we put out as well. So I just wanted to give that context and background. So we started and said, hey, let's understand this. How does this look globally, right? It's an issue globally where women are significantly underfunded, but Africa, we found the data we found show that Africa is still the lowest on a global scale, right? And this is just percentage going to women, despite women being very economically active in Africa, right? This is World Bank data that shows 58% of women are economically viable. Then we said, okay, let's look at how capital allocation to women has happened across the past 7 years. As you can see, it's never past 2%. And the trend, if you're looking, if you anyone's into economic statistics, is actually downward and negative potentially. So there's a lot of work to do. It's not just 2025 data was what inspired us to look at this, but then we looked back and saw that it's actually more of a trend. It's not a one-off. So looking at it all round by gender, you can see that male-only teams raised about 85% of total capital was deployed to them over that 7-year period. Female teams only got about the 1.2%, which is 284 million. And for us, we said, look, this is really systemic. The data just now shows it and makes it very obvious to us. And when you look at in terms of deal count, the number of transactions, or 7.8, just call it 8%, went to women. So if there wasn't a bias, that means women technically, if it was just 8% of 23 billion, there's about a $1.5 billion gap over that 7-year period that should have been allocated to women. Then this for us was very interesting when we looked at how much the average ticket size to different categories of teams. So male-only teams, gender diverse teams, solo teams, female founding teams, and female solo. What we found is that there's actually between male-only and female, the average ticket size is a 6x difference, right? Which is significant. It's actually very similar when you look at male solo and female solo, it's about 5.6. So we're all around 6, right? Huge, huge issue. But, the point of this conversation is to put context towards the panel we're going to have, but it's really to engender discussion, right? With all the different parties here in the room, the founders, the investors, the ecosystem enablers, the LPs who deploy capital to fund managers. This is for us to just have data to say, let's have a constructive discussion. And as Ibijaka said yesterday, let's co-design framework solutions, strategies that can work for everybody and help move. If we all agree that there's an issue here, how do we all collectively solve it? Then when we began to look at the breakdown by gender and stage, what we also saw is two things. One, on the early stage, women are over indexed with grant capital right at the bottom here. So if you look at that, it's about 200 million is in grants has been deployed over that time. 62 million of that went to women, which is roughly about, you know, it's much higher. You're getting about 40% of that capital, which I do believe there is a place for grants, TAs, etc. But I think they used to be need to be used wisely and as a blended instrument, because inadvertently what has happened is grant capital has almost become like a trap. It wasn't designed to be that, but it's almost become that, right? And that's why it's being over indexed on that. Secondly, we also then saw as of 2025 data, which is what we looked at, no female founder had raised beyond the Series B as of yet. Now, you could argue, on one hand, you could potentially argue that, okay, the ecosystem is maturing, but there are lots of men who have done it, right? So I think it's something to be looked at. Just we're looking at it to say, is it the ecosystem is not maturing, but there is signs because you're seeing Series B and above about 7 billion. So it has matured. Why women? What's that? There's almost a Series A cliff, right? Also something to for us to consider and look at as well. When we began to look at sectors, this was actually very interesting. We didn't expect this, but the gap between capital flow to women and men became very obvious. You know, fintech has raised about almost 8 billion, but most of that has gone to men. There's 117x gap between that. And it's consistent across most sectors. And when you look at it, healthcare versus fintech, they've actually raised about the same amount in volume, but health tech hasn't just been as big. So you would think the biggest sector that everybody loves has, made unicorns out of the continent, would also have a very strong bias towards women. It doesn't. So I think this is just once again for us to opine upon. So we looked at region as well. East Africa, led by Kenya, has actually a lot of capital has gone towards women there. And there are reasons for that. We'll go into that in the full report, our opinions on that, and continues to lead the way. But West Africa has been quote the darling for a while. But I think for female founders, it's more inclusive and there's just more. If you look at the average ticket size for female founders in West Africa has been 500,000. In Kenya has been about 1.4 overall. To conclude, there's just a few points. One, the data is there. We're convinced. I hope you're also convinced that the data is there, and it shows that there is work to be done and there are challenges, and this is across stages, sector as well. Two, there's a big gap that needs to be solved for. It's not about the quality of businesses because I believe um, investors have spoken to some of the founders here and they can tell they have good businesses, right? So business quality is not an issue. We need to look at how do we change that? How do we drive that? And finally, we just had some thoughts, right? We're not experts, but we're sharing our opinions from the discussions and what the data is showing is that one, we believe that blended capital needs to be looked at that is structured for women and the types of businesses they run. That's both equity, looking at equity, debt, grant, technical assistance as well. We believe it would be, suggestion, and I know a lot of fund managers do this already, is look more at, gender mix, even from deal sourcing and make sure that there are quotas in there, but at least there is awareness of that. And lastly, the last one is more for female founders themselves is begin also awareness of looking at grants and also debts alongside equity because a lot of people, and I've seen that increasingly, there's more awareness of that of people saying, actually, for my business model and my type on how I'm targeting, I actually need a blended structure of both, layered with equity, debt, and grant or working capital. So these are just our thoughts. And with that, I conclude.